Hey everybody, this is Jim at SP500chart.com. It is 10 minutes after 4 on October 16th, 2013. Before we look at the chart, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 15-minute chart. Yesterday, we noted that that even though our mustard-colored channel, call it yellow, whatever it is, even though this channel broke, it appeared that we had come down in a descending little wedge pattern that, if we could get over this top line, should result in some more upward momentum. And that is exactly what we had happen today, sadly, as is often the case. We make this move with a good portion of it having taken place in essentially a gap. Kind of interesting to note, if we zoom in on this just a little bit more, you can see how we came up to our two little lines of resistance right here and kind of bounced in between those lines once, and then the S&P said, nah, we need to get higher, and we rallied up pretty nicely. Now, that's great. What do we now look for in this chart? Well, a couple things. Now being over this 1710, 1708 little area of resistance here that you can see held the S&P back on the 14th and 15th, Monday and Tuesday. I now would offer that those lines should now be flipped over to support. So we end the day, interestingly enough, again, after so many days of seeing us stop right at a line, we stop in between again, just like we did yesterday. We stopped over this support line but under this resistance line almost midway. Today we stop over these two lines but under this line. So I would still consider that this 1727 area right here, let me show you where that comes from. That is a rising line that comes off the first two touches. I forget whether I need to go. I think a 2-hour chart will show it. It's this line right here that is our May high and our August high extended out. Now we've got a second line that is our August high and our September high that is this light blue line. And to be frank, it's hard to know which one of these is gonna put up more of a fight. This is the one that we were temporarily over back here in September. This is the one that is drawn over the last two tops precisely. Now we mentioned that if we get this pattern down here, this left shoulder, head, and then no right shoulder, if this works like these strange patterns have been working, then we have a distance that we can measure here that takes us to about 1740. So I would say let's stick with that call. Let's say we make it to 1740, another day like today, and we're there. Okay? And I remind you that this rising channel that we were in was really very, very steeply pitched. And there was not, I don't think there was really any way a person could reasonably assume that that aggressive a pitch could possibly stay working for any appreciable length of time. If we were still in that channel today, we would have to be up at about 1745. That's just not reasonable. So I'm going to do one more quick thing to this chart, and then I'm going to leave her be, and leave you be too. Let's start back here with this dip, and let's draw a line right here. And let's see if looking forward into the days and maybe weeks to come, if this line tells us anything as we move ahead. I'm going to make that really super light gray so we don't get thrown by it that this is anything that's proven its value, because so far it hasn't. But one thing I will show you, it is not nearly as steeply pitched as this line. It's still more steep than this one. So let's just see if that tells us anything as we head into the rest of this week, and as we head into next week as well. So for right now, I think it's good to let this call for 1740 remain intact based upon the size of this dip. And guys, that little wedge worked out well today. This little neckline gave us support on a Monday. And about the only other thing that I could mention right now is, as we look at what took place today, it's not a real tight pattern. So what I'm going to do is I'm just going to draw a line across these tops because they line up. They line up pretty well. And they are right at 17, just under 1722. And then we could also snap a line at about this level. But you know that this is a little ragged here, so I'll leave that. But this one up here, I think I'm more interested in. If we get over this line, then I think that should tell us that this may be a little horizontal flag pattern here that's pointing us in the direction of a move up to about 1740. The only other thing we could do is we could try to maybe interpret this as a flag, but right now I believe that's a little bit of a stretch. Let's just say that we spent most of the day today between 1715 and 1721 and change. And if we break out over this pattern, then we should be looking at a minimum move to 1728. And if this is a flag and we end up with another one of those situations where the flag kind of flies at half-mast, then I think 1740 looks to be very, very, very likely with any forward momentum whatsoever to get us out of this little range right here. So guys, there's your video for October 16th, 2013. Thanks for watching, and thanks for your support.